This is Kerry Artac with Artac Advisory. This is the weekly vlog, a video post on the website. Just jump to it right now. Artac Advisory, the vlog. I'm on the vlog page right now. And obviously you may be there as well if you're watching this video. But I encourage you that if you haven't had a free trial in the last 6 months, please fill out the free trial form at the bottom of the page. Maybe tell me a little bit about yourself. I'll give you 2 weeks, no questions asked, and it'll include a phone call as well. I'll call you early in the free trial phase. We could have a consultation if you like, go over some of the markets you're trading. I'll give you my opinion about some of those, so forth and so on. But yeah, if you haven't had a free trial in 6 months, please fill that out, and I'd be happy to send it over to you, no obligation. Anyway, let's jump into the video analysis. I've got 3 markets I'm covering today in this week's vlog. January soybeans, December live cattle, and December lean hogs. So let's talk soybeans. This is all of these, by the way, are weekly continuation charts, volume-based rollover. So when the next month becomes of higher volume, it replaces the preceding month. So this is a stringing together of preceding contracts. In August, late August, I had a buy signal above this longer-term channel top that went back 3-4 years in the soybeans. This is the weekly continuation chart once again. And that buy signal, as I'd mentioned in my daily newsletters at the time, was expected to yield this 1140 and 3/4 channel top over the following 3 to 5 months, or in other words, into late winter, spring of forthcoming. So that's in play. We're, 2 full months into this buy signal, and we just might reach this level between now and the end of November. I'll get to that in a moment. But if we're just looking at the big picture, say for the next 3 to 5 months, we have solid pullback support at 992 and 3/4 that, if tested over the coming weeks, can absorb selling through the rest of the year, even into later winter, and above which, or once tested, the market can recover and push onward to this overall objective at 1140 and 3/4, which, if tested over the coming weeks, coming months, can absorb buying into spring, into summer of next year, and from there the market could fall back over the longer term time horizon. If we were to close below 992 and 3/4, I'm getting way ahead of myself here, then I don't see a huge sell-off. I do see a neutralization of the longer term, the 3 to 5 month rally, and the following 2 to 3, 3 to 5 weeks should then continue south to 940 and 1/4, where we could bottom out into next spring, and then ultimately, perhaps next summer, reach this 1140 and 3/4 channel top. Now, 992 and 3/4 actually becomes an objective or a target if the market settles below this 1040 and 3/4 channel bottom, which is a respectable support area that can contain selling into later November. And once we test 1040 and 3/4, assuming it holds, that 1140 and 3/4 channel top I showed you a moment ago is in reach within 3 to 5 weeks. And let me just actually sort of rephrase that. Holding above 1040 and 3/4 will keep 1140 and 3/4 in reach into later November to mid-December, where once again we can top out well into next year. But, and this is what I'll leave you with soybeans right now, if we close the week Friday below 1040 and 3/4, then expect this 992 and 3/4 formation within probably 2 to 3 weeks. This speed line is trend defining. It can once again absorb selling into later winter trade, and above which that 1140 and 3/4 formation expected essentially over the next 2 to 3 months. Let's jump into the live cattle market. Just going to back up a little bit. This long-term descending speed line, trend defining, we actually settled above it for the first time in late July. And I say for the first time because it looks as if we'd settled above it here, but this speed line did not exist until this low was placed in April. And that's the nature of speed line analysis. So when we settled above it in late July, I'd mentioned in my daily live cattle letters that 123.07 formation becomes a longer term now, 2 to 3, 3 to 5 month objective. So we're obviously 2 to 3 months into this buy signal without any appreciable upside follow through. Nonetheless, we have a floor of support that actually was tested last week and is this week at 101.77 to 102.57. This same speed line long term, as well as an ascending channel bottom that is more midterm in scope using the April low. So we'll just call it the 102 level, 102 handle support, able to absorb selling through winter, and above which the 123 handle still remains a realistic 2 to 3 month, 3 to 5 month objective, somewhere in there, say spring of next year. Now, the market does accelerate to the upside if it can close above this week, above 113.05. Here's that ascending channel bottom at 102.57 I showed you in the previous chart. And holding above this area that we did essentially test last week, the 113.05 formation is likely now over the next several weeks. It can contain buying into later November, possibly December trade. We could continue trading inside of this range between 102 even, roughly, and the 113.05 channel top. Through the rest of the year, perhaps. But closing above 113.05 is the likelier outcome, given this longer-term bullish dynamic that I expect to continue playing about above 102 handle support, with the 123 handle being an overall objective. So closing above, this 113.05 channel top. I'm not going to label it here, but it's at 113.05. If we settle above this, 3 to 5 weeks? A couple of months at the most before we reach this overall 123.07 channel top, which can contain buying through spring and even through summer of next year. Now, I don't have it labeled or drawn in a graphic, but if we did settle this week below 101.77, a good high, really not only through the rest of the year, but probably through winter trade, and I would expect 89.25. It's nothing more than the high of the April low. There's other things going on there. Sorry about that. There are other things going on here. There's some Fibonacci retracements, so forth and so on. But 89.25 becomes a 2 to 3 month target. Could be realized much sooner with a settlement below 101.77 at the end of this week. Then not considering 123 handle as an objective, but then 89.25 as a 2 to 3 month target or less, where we can bottom out through winter trade. But I'm just giving you the downside scenario that does not exist, only exists with a settlement this week below 101.77. Until then, 123.07 remains an overall longer-term target. Finally, lean hogs, December lean hogs. This, once again, is a weekly continuation chart. And when February becomes front and center or higher volume than December, it will inherit, if you will, these levels. So just kind of backing up a little bit, similar to all of the markets have posted buy signals somewhere between July and September of this year, commodity markets, cattle, grains. But here we have lean hogs in early September. We settled above this descending channel top that spanned a couple of years, then indicating 77.60 within, at the time I was saying, 2 to 3 months. And I'm still holding to that, but we could fall back to 57.37 over the coming month or two. And I'll get to that in a moment. But let's just continue with the 77.60 target. This formation, if tested between now and, say, December expiration, can contain broader lean hog market buying pressures into next spring. From here, we could certainly fall back to what would then be a channel bottom, two channels intersecting in the upper 50s. Now, on the way, if the market decides to sell off, I don't know how to phrase this properly. This is sort of a blown-up version of what you just saw. This is the buy signal in early September above the 57.37 channel top. We now have a new ascending speed line that was based off of this high that this week, the week of Monday, November 2nd, comes in at 63.92, and it actually represents trend support for the lean hog market through the rest of the year. This is a line study that can absorb selling into December expiration, and above which this 2 to 3 month objective at 77.60 is actually in reach over the next 3 to 5 weeks or so, where once again the market can top out into spring of next year, and once tested, fall back into the upper 50s within a matter of months. Inversely, if we close below 63.92 at the end of this week, the week of Monday, November 2nd, then 2 to 3 weeks, 3 to 5 weeks, something like that, bearish continuation down to the 57.37 formation, which is, by the way, dropping into the 56 handle into mid-November. and it is one that can absorb selling through winter trade. Once we test it, I'll begin talking about the possibility of the market, rotating upward and possibly reaching 77.60 over the following months. But let's be clear, closing this week below 63.92 will take the wind out of the sails of this market, and we should then fall back into the upper 50s, 57.37, able to contain selling through winter trade. Now, let me talk upside it. If the lean hog market just sort of takes off and closes above the 77.60 formation, and this, by the way, is rising on a weekly basis. I do cover this in a daily lean hog letter. Closing above this formation, expect continuation, bullish continuation, probably accelerated bullish continuation over the following 2 to 3 months, 3 to 5 at the very most, into the 100.17 region. This formation, if tested, say spring, summer of next year, can contain 2021 highs. And I think that's all that needs to be said for this particular vlog analysis video. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.